All right, so now we're recording. So once again, I'm going to reiterate that tonight is going to just be simply on supply and demand. I know you see a harmonics pattern right here, but actually I'm going to take that away before I get started because I'm not doing harmonics tonight. Simply supply and demand. All right, so that's all we're going to be going over tonight. Like I said, I'm going to be looking at AU primarily. Might look at Euro Pound, might look at Pound U. Been watching those three this week. And they're ready for some bullish movement right now, especially with it being midweek reversals. Now, so here you have your odd USD. You see you already have your supply and demands already plotted there for you. Now, on the website, and I shared it to the group, that picture, this chart right here, but I actually just had the pattern draw on it. I just don't have that on there now. I took it off. So as you currently see right now, price is flirting around the ADR start where price kind of started its movement from, AKA from over here. So it is here right now. You see this consolidation here, AKA right now it's 9:16 Eastern time. It's quiet time, AKA this is when smart money is building up like I've told you all before. So when I posted this on the website, this green line here was the buy entry. At the time I posted this, price was like up here somewhere on Sunday when the markets open. But yeah, so this was the entry point, and this was the stop loss. So this is the way how you can plot when you're trading supply and demand, how you can be positioning your stop losses. So you see the stop loss here is right below the demand zone. Because if it were to take out this demand zone, then it's probably going to come down here and try to test this demand zone, AKA the ADR low. Now, you may not have the indicator that tells you where the ADR low is or is not. Don't worry. If you choose to continue with me past Friday, I will give you all the tools that I have as far as for marking up the charts. Nonetheless, though, right now you have this consolidation here. Like I have said before when I first told you all or taught you all about supply and demand, the best ones come out of bases like this. So this is a good demand zone right here. I know it's falling from the small supply zone, but that's not a good supply zone because it did not come from a area consolidation. It came from a single candle, and it really wasn't even that good of a single candle. It was this little candle right here that caused that supply zone. And it's negated because then it shot back up and left that wick. So that was buying pressure right there. So it'll blow through this. So that's why I'm not worried about it hitting this supply zone and then dropping back down. So again, when you're trading supply and demand, you can always put your stop loss just below your demand zone. Or if you were trading on the sell, you will put your stop loss just above the supply zone. That would be your stop loss. For example, if you were looking to sell this, then your entry then would be about right there. Or you can put it somewhere in the middle. Typically, you just want to look left and see probably which candle gave you the biggest drop. So you can actually probably move this here. And I did that because of this candle right here. And then this candle with this candle combined, letting me know that this area right here is probably the deepest it's going to go to, and that supply zone to drop. I'm not telling you it's getting ready to sell right there. I'm just giving you an idea for when you're trading supply and demand on where you can put your stop losses and your entry point. So for example, like I said, if I was going to be selling this, this would be my sell entry. If I was going to sell this one right here, this will be my sell entry. My stop loss, as opposed to being that this supply zone is right here, the ADR is here, and I have another small supply zone right there. And this will be a really good risk to reward ratio, but that's not really in your favor because the ADR is right above it along with another supply zone. So I will probably go ahead and put my stop loss about right there. That is only 16 pips, 15.9, so 16 pips. And if you were taking this for the buy, you will be taking this down to this supply zone. That's 95 pips. Now, will price take a breather somewhere up in here before getting all the way down here? Of course it will, but it's still going to come down here and chase this demand zone. Sell high, buy low. Price right now on this pair moves about 63 pips per day. That's a 90 pip drop down there. So right around here where you have consolidation building up, this is probably a 30 pip difference. Let's check that out. Didn't I say it? Roughly 30 pip, 41, a little bit off. But my whole point is to say that it's going to probably most, excuse me, most likely what will end up happening is that if you were selling this, it would sell down back to where this is at right now, aka there's a demand zone here, but it's going to get washed out. Price will hover here and then break through this demand zone, then taking you down to your take profit area, which is this demand zone here. Now you're getting out and you're looking for your next move in the market. So that's how you will play this on the sale. I'm not telling you to take that sale right now. The only thing that I'm saying, if you're going to do anything on all year right now, is you're going to look for that buy. And you're actually still kind of in a good position if you all wanted to look at that trade for yourself. Like I said, don't just trust my analysis. Don't just trust my signal. See it for yourself. But you see right now, price is currently at the 0.74713. The entry here is at the 0.74680. That's not that far away, which means over the course of the next few hours or by London, that's really nowhere. That's roughly like 3 pips. So what I'm saying is you can set that as a pending if you would like, or you can not, or you can do a market execution or whatever you choose to do. I'm not here to give you a signal tonight. I just want to give you an idea of what I've already shown you in the group this week and what I put on the website for the world to see. So that's that. Let's now look at the 4-hour time frame. We're going to go up because I want to show you the reason why we're going to buy. I'm going to paint the picture for you. So on the hour time frame, as we just saw, price is sold, and now it's bouncing out of a demand zone. It's creating a consolidation or the base that we prefer for any zone, supply or demand. Why? Because that's the stronger confirmation for us that that's a good trade to take. Also, that when price comes back to that area, we might be looking for another play to the upside in this situation because we're looking at a buy for AU. So we're going to go to the 4-hour and see why we're looking for that buy. Again, we have a demand zone here. Now this demand zone, even though it was formed from a single candle, okay, look over here to the right. You see this is market structure that was formed right here. And that's why we see all that consolidation. It's only a few candles right here, but we see all that consolidation here because it created market structure on the 4-hour, letting us know that we're in a pretty good position to continue to go upwards as opposed to going down. Again, all this right here is what created the market structure. This candle with this wick. That's what all this is right here. And so because of that, it did not retest the demand zone. It got rejected from it, which means if it got rejected, it has to go in the opposite direction of it, supply and demand. So it needs to buy. It's time for the markup phase, okay? And it first began its markup here. And we know price does not always just shoot up. For one, smart money has to build. As I said, that's consolidation. So when price shot up here, there were still orders that didn't get triggered. So we had to come back to this area. Banks push price back to this area so that they can re-enter for the bigger buy move. Now go to your daily time frame. Now I have another pattern here. Can't really make it out though. You can't really make it out though because that's a pattern from the weekly. But nonetheless, I'll show it to you. Just that I'm not going to teach on that tonight. But nonetheless, let me get this out the way. So if you remember anything from the harmonics pattern training that we did, then I did go over AU in that training, if I'm not mistaken, and you did see a pattern there. So if you remember, that pattern had completed itself. And that's what this is over here. It's the completion of that pattern. That's why price is now buying up from this area. Market structure. This candlestick here on the 4-hour is all this right here. And like I said, that candle there is this here. And it gives you what you want. This tells you there is coming from a base out of the hour. Good indication to confirm what you may not be seeing on the higher time frames to hold a trade for that long for 90 or 100 pips. Because like I said, it's going to go for about like 92, 93 pips, I said. So it's done completing this pattern. So now it's going to go up and it has to chase these supply zones. Is it going to chase? You figured out. But no, for the most part, it's going to at least chase the first one, right? So that's the main one you want to be concerned about on a daily time frame. That is more than enough pips to go around. You take that from about right there. Let's say you enter where I had the entry point set up. That's 309 pips. More than enough pips for anybody, regardless to what your lot size is. So if you're doing a standard lot, that's $3,000. If you're doing a smaller lot, you know the math. I think in standards. Nonetheless, that's why that's getting ready to buy though. So now you see, I told you all, I think on the first supply and demand training, that on my my template that you're seeing here with the supply and demand already done for me, for example, I can take this off and put it back on. I don't like to have to always plot out my supply and demand. It's time consuming. And so, like I said, this will be one of the things that you'll get if you move with me forward. And see, it just does it for me. So I don't have to draw these out. I don't have to look for them. I can identify them already, but this is one of the things you'll get with me. But the reason why I'm pointing this out is because the way this works, and this is not an indicator, it's just like a preset, is that of course, the red boxes are your supply zones. The blue ones are your demand zones. The green boxes is your retested supply zones, AKA pretty much telling me that when price comes back up into this area, it's probably just going to push through it and not fall from it because it's been retested a few times. And we can pretty much see that here. Fail there, retest, couple of retests there. So it's safe to say it's going to go through that and go upwards, headed towards that supply zone. Now, the gray boxes, of course, then would be the retested demand zone. Came out, retest. Now, if you look a little closer, let's see. This is the reason why, because normally on the retest, it has to test 3 times. So the reason why you're saying this one is because the red candle right here, which is not, you can't really see this in the box, but it's there. Then you have the blue bullish candle. But then you have this other bullish candle, but it left a wick to the downside. So that means it did get some selling pressure and gave a retest after it clearly had closed above. So that was the second test, okay? And here's your third. So that's why it's gray now. So that's why one price does go back to sell after it comes up and hits another point to drop down some more. It's probably not going to bounce off of this gray box because this gray box has been tested enough now. So it will go to the one below it. So that's how you would do that. So when you're drawing these out for yourself, you're not going to be able to have it signal to you when it's been retested or not. So that's why every time when you create a box, every time you create a box, you always want to stretch your box out across the screen. So how I showed you all the other day, for example, like don't worry about all the lines. This is a different chart, something else. Same chart, but just different viewing of it. Just pull it out all the way like that. Now, the reason why you're going to do that is because if you, all these lines, let me get this out the way. That just looks ridiculous. They're there for a reason. They're just for monthly houses. It's just weekly lines. But let's do this. And let's take it from here and bring it all the way back here. Because it would, let's just say, like that. So this way you'll be able to see for yourself. You can zoom out of your own chart and say, okay, hit there, hit there, hit there, hit there. So you know it's retested. until, like I said, you either purchase this indicator from out there on the internet. I forget where I bought it from, or matter of fact, it may have been given to me. I'm not sure. I've had it for years now, but this is how you can do that as of right now to be able to see is this a retested zone or not. Just make sure whenever you plot a zone out, especially if it comes from a base or a very, very like what's the word? I guess you could say engulfing candle. I don't care about the candle before it. This means if it's a very large engulfing candle like this one, and say, for example, this is a supply zone or whatnot, and this thing come from a base. It's a very small, it's a small base, but it's not that big one. Say if there was no base and price just fell from here and there was nothing to the left except for this stuff down here. That's what I mean, okay? You still want to plot out that one all the way to the right because of the candle, because this was probably news, something like that. You get what I'm saying? Or other than saying, okay, this little small area too is a supply zone and stretched all the way out over. This may be a supply zone, but it may not be that big of a one. For example, this one could have came and stopped here because this small wick could have been a big enough retest for that. When you draw your supply and demand zones, what I want you all to do is focus on locating supply and demand zones that have a base, that come from a base. Ones that come from areas that give you a good indication. Oh, okay. That's dropping down. That's retracing. Did news just drop? Can somebody check Forex Factory for me and let me know if any news just dropped for Australia? I know there was news yesterday, but I'm just curious of why this candle is dropping like this. I've been out and about today. It's not that much, only about 20 pips, but nonetheless. Oh, I know why. Never mind. If I'm not mistaken, did Tokyo market just open up? Let me check. Let's just double check here. If that could be why. That is the crossover hour. Oh, they've been open for a couple of hours. Okay, I get it. All right, so I don't think there's news. I'm going to check my phone right now, too. Just give me a brief second. And this is, like I said, too, when I gave you all the training about the futures and learning how to figure out what's happening with each currency individually, because certain things can pop up that you're not aware of if you don't have a strong handle on fundamentals. And for example, right now, if your account couldn't withstand, like if you entered here on the signal, and this is why I said don't take my signals unless you can see it, because you may not have been able to even withstand this 15 pip retracement. Now, will it come back and blow through all the way to here? It's a good chance that it may. But for those who took this trade earlier, they already profited. Now, I'm looking at my phone. Let's see, what time is it? It's 9:30. Oh, there was news. There was news that just dropped. So there you have it. I was wondering what made that just push down. And see that this is another reason, like I said, where it was not whether it's fundamentals, aka you know what the Australian dollars getting ready to do up into 2020. You know what their predictions on interest rates, inflation, unemployment, GDP, and all of that is. And there are sites out there that give you all that information. If you are aware of all that, what that is, you still want to keep in mind, let me check Forex Factory or my FX book and check on the news, because as we just saw in the middle of a training, a signal that I gave earlier is now going opposite of my signal. Why? Not because my signal's wrong, because news just came in and played with my trade. Simple as that. I was not aware that there was news dropping tonight. Yesterday there was news, like there was three speeches for Aussie last night. I was well aware of those. Was not aware of this news that just dropped. And this news that just dropped was not good for the economy in Australia, which is why it was dropping. It was the wage price index, which did drop by 0.1%. So that's why price is dropping like that. And this was a red folder. It was not an interest rate, a monetary policy, anything like that to produce like a big like drop. Now the next candle could produce more bearish movement, How much bearish movement, though, is yet to be determined until we get to London session, because as I mentioned earlier in the group chat, today's the 15th. It's the middle of the month, and I'm pretty sure you all have heard of midweek reversal. So if there's something called a midweek reversal, there should be something also called a mid-month reversal, and there is. So I'm going to give you a snapshot of what it looks like. So I'll need to scroll out, zoom out some more. Let's see. Let's put that there. This is April 16th. Let's see. And we'll just go with that. That's April 1st. So from the 1st, pretty much, to the 16th, aka the first 2 weeks, the beginning of the month, what did price do? It started from here, shot down a little bit, about 20-something pips, and then bought up for 141 pips for the beginning of April. But for the end of April, up until May 1st, so from the 16th to May 1st, what did price do? Opened about here, bought up for about 35 pips, and then shot down 253 pips in the last 2 weeks of the month. The beginning of this month, what happened? Price started here. So for 133, bought up for 30. Not much movement. On the 4-hour time frame, this looks like it's just up and down in the beginning of the month, and it pretty much is. Better way to view it, though, is to go down to your hour. So you see really price was consolidating the first week of May. Then it sold. So it came out of its consolidation in this area where it was last at from last month anyway, right? Then it dropped about 100 pips actually. Take it from this candle here. For 100 candles. I'm sorry, for 100 pips. Okay. And then it bought right back up from there. And that was for about 156 pips. Then it sold over the past couple of days, aka this week, for 114 pips. So in totality, the bulk of the movement that occurred the beginning of this month was buying. Because if you think about it, if it opened up at this level right here and it sold down to here, it bought for almost 100 pips for 90. Then it dropped from that 90 pip rise and fell for about 145. Then it rose for about 155 pips. So which means in totality, it had almost 300 pip push to the upside, just not in totality. As opposed to, what was this? This was about 100, I said. And this here, like 118. And so it dropped for about 200 pips total over the first 2 weeks. All that stuff I just said, honestly, is neither here nor there. It just gives you an idea of kind of the direction that price did, especially because honestly, right now, this market for all USD, this is consolidation. It's just a continued consolidation that we saw from the 4-hour. See? Really there? And we love consolidation because, like I said, that's where the smart money is. So for this area right here, like I said, you have more movement to the upside than to the downside. Now, last week, like I said, last month, at the end of the month, this is what the market did. It sold. It will continue to sell in the beginning of this month. So being that it's time for the mid-month and mid-week reversals, this gives you double confirmation of why or I guess quadruple confirmation now why you should buy it, other than pattern of supply and demand. It's simple for the fact that the beginning of the week started, what's today? The 15th? So like yesterday, like where's my 10 o'clock candle? Where's my 10 o'clock candle? Boom, London. London open right here. And prior to those few candles, that's Sunday. Nobody cares about Sunday. 120 pips from the time the market opened on Sunday. Like I said, I started the line from the London open candle. So this tells you that as of right now, Monday and today, it did what? It sold. So right now, what might end up happening is that we might have a pattern that forms here. We might have a middle peak and then another small trial down here before it buys back up. But I don't want to confuse you with harmonics. And I feel like I am, that I'm kind of like rambling a little bit here, and I do apologize for that. But it's recorded. You can always run it back for anything that I'm not saying that's clear. Sorry, I've just been running around all day, and I did not want to leave you all hanging like I did a couple of times last week when my life got in the way. But nonetheless, like I was just saying, when you're looking to get into this trade and it's midweek reversals, you know it's been selling all week. So the opposite that it should do now will be what? A buy. We also know that mid-month reversals in April put all USD on a downtrend. That downtrend continued into May. Now that it's the 15th, time for a mid-month reversal, which lines up with tomorrow's Wednesday, and Thursday is typically reversal day. It's lining up perfectly, telling you it can be a buy. Will that buy really push and occur tonight? Possibly, because today's the 15th. It's still the middle of the month, but it's not the middle of the week just yet. So that's why you see all this consolidation occurring right here. If you go down to a lower time frame, it's a lot more consolidation. Now, the cool thing about your 15-minute chart is you can also see here, where's your okay, there's your next demand zone. Lines up good and perfectly with the higher time frame, just to give us as far as for a distance range. Because remember, supply and demand zones will change per time frame. They're not going to be the same on each time frame. They can run into each other, but they're not going to be exactly the same across the board. Now, go back to your hour. Okay. So, midweek, mid-month reversals. Chances are we may not see a strong push to the upside until London session. See how my head is tonight, you guys? Till London session on Thursday, aka 3 a.m. Eastern time Thursday morning. We may not see that strong push up. Chances are we can see it start to occur. London session tonight, though, or this morning. If this takes out the stop loss that I have set, the furthest is going to come down to here. So if you're looking to trade this tonight and you say, oh, I don't know if I want to get into her trade right now, or if I do, I'd rather buy right now than enter what she said before. That's fine. I don't care how you do it. I'm not telling you what to do. If you choose to take this buy and you're too iffy about it right now, for one, like I said, if you don't have a good grip on institutional trading and have your own kind of idea or strategy how to do this, don't mess with this right now anyway. Wait until it's closer to London session and see where price is at around 2 a.m. when Frankfurt session opens, which is when the markets or when business open in Germany. So wait till around 2 a.m. If price is still hovering in this area, if it's just further consolidating out, you know you're in a good position to buy. If it came down here, you're in an even better position to catch more pips. Okay? It's going to either do one or two things. It's not going to shoot up between now and London. It's going to stay within this box. It's going to stay within this box. And you can go on your phone or laptop or whatnot, and you can draw this box out. Price is going to stay right here between now and London. It's not going to travel really outside of that box. Now, I know you see this candle here. Like I said, it's a chance it can, but don't be fooled by a false breakout, because it's a chance that it could come and assume and play like it's going to come down here to this demand zone, but it does not have to touch this demand zone. So like I said, wait till around 2 a.m. Set your alarm clock if you got work in the morning or whatever like that, and you got to get your beauty rest, and just see what price is doing. If you wake up and it's too scary for you to get into and you're not sure, don't get into it. Just wait until the following, just wait until later on that day when you get up and you're able to look at it and see what actually happened. Did price blow through this demand zone and keep selling, or did price bounce up? That's pretty much it. Cause like I said, my head right now is kind of all over the place, and I don't want to just ramble and oversaturate anything that I've already said. So I'm going to open it up for questions. Before I do that though, quickly, I'm going to give you a quick look at Euro Pound. On Pound USD. Let's do Pound USD first. I think I'd rather do Pound USD. Let's go ahead and look at this really quick. Okay. So here you have your Pound USD on your day. Let's just quickly plot out some zones here. Okay. So, oops. Actually, I didn't mean to do this. I'm going to do it from this time frame. So I'm just trying to help you all set up for London. So, and you have, it's already on there. Make that blue. Now, within this, like I said before, these are your two major supply and demand zones. Now, you do have some ones in between. Oops, actually, that's not it. All right, so there you have your supply zones, and you have your demand zone way down there. So you come down to the hour. Look at this consolidation. Pretty much where price is at right now is a very, very good entry point level as far as for where smart money is probably sitting. Let's look at the 15. You see how it's sitting on this line, and you have it clearly creating support here, clear support here, false breakout here from this consolidation box, from this box of consolidation. You got a false breakout, you got a false breakout. Okay. Chances are price is going to come back and hit this demand zone and then bounce up, because it hasn't really given a test back to it. If you really look at it, see, came right out of there. This may be that test. AKA, this is also what you would call that retest. It's not considered a last kiss trade. If any of you are familiar with Naked Forex, the book, I recommend you reading that so you can learn how to read a naked chart. But you can, you would know then that if price comes and hits this, and it has not been retested, this hasn't been retested, chances are it's going to buy up. Most likely it's going to buy up. So that's how you would have that on pound USD. So on this one, I think I'm still currently in this one. I think right now where price is at is right around where my entry is. And I think I got in at the 1.34820. So I got in just below where price is at. And I've been in this trade since last week or for the past 2 weeks. And I've been in profit and I've been out of profit when this occurred, when this happened, because I got in sometime around like the beginning of the month. But like I said, that's just being aware that all this right here we see is smart money. This is a beautiful consolidation. This is a beautiful and perfect base. Look how many candles that is on a 4 hour. On the day, that's still a lot of candles. On the day, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. And we're going to have another one. It's going to be like 10 candles there. If it has at least 7 candles, that's a good base. Go down to the 4 hour, look at all that. You go down to the hour, look at that. That's one hell of a base. That's one hell of a base to let you know that price is getting ready to do something very serious from this area. And where is it going? Well, we know per the day chart, it's not getting ready to chase all this. For one, we do see a pattern. We do see that. A completed pattern, which means price needs to go up and chase these demand zones to give a retest to that. Same reason why I told you all about price action trading. I gave you all those institutional levels. Remember that training? Well, on that training, remember how I mentioned when price does this, you see all these bearish candles? You got one bullish candle there, and then you have like 2, 3 bullish candles here over consolidation, which means none of this that just recently happened has been retested. The market has pretty much just took a dive. All USD just took a dive. I'm sorry, pound USD. This is not all USD. Just took a dive for 930 pips over the course of 4 weeks since April 16th. It's dropped for 930 pips without retesting anything. Market does not move like that. It cannot move like that. That's why you have all that consolidation building up right now. And it's beautiful because it matches this consolidation right here, which also is 1, 2, 3, 4, 5, 6, 7, 8, like 8, 9 candles, which means if you go down to the lower time frame, this is going to be 20, 50 candles in this box as you get down to lower time frames. So here you have another good setup for you. When we get off of here tonight, feel free to go on to your platforms and chart up pound USD. Right now, take a screenshot or two if you need of this, so you can get you an idea of, kind of what your screen should look like when you're looking at this tonight. If you're going to be trading pound USD, this one right now is probably my favorite out of the 3, USD, pound USD, and euro pound, as far as for the buy entry area. This is my favorite right now because it's more defined. I know that price, but for one, there's no news on pound USD. Neither one of these pairs moved during this hour. Why? Because they're both London and New York pairs. So they're going to be quiet and continue to consolidate. So the money that's stacking up right now is stacking up pretty much right in the area where you're seeing it, which is why price really hasn't moved from this area within the past 24 hours. So this is a good one for you all to look at. So I'm officially going to go ahead and stop talking your ear off. Let me stop my share. Let me unmute you guys. Anybody have any questions? Anything they want to say? Any comments? Go ahead and speak now or forever hold your peace.
Do you trade gold?
Yes, I do.
Did you take any trade today?
No, I haven't been trading gold this month. I've been focused on these patterns only. I'm focused on Forex currency pairs only because with I've been getting a lot of new people who are interested in trading, and I don't put anybody that's new on commodities until they first learn how to trade currencies. So
Oh, okay.
I haven't been looking at any gold or oil or anything like that this week, the past couple of weeks.
Oh, okay. Because I saw gold went down since yesterday afternoon.
Hmm.
It went all the way down from 13, all the way down to 13.11.
That has a lot to do with. Well, I'm not going to say that it has a lot to do with it, but um, you have to look at too, like your condos, like New Zealand, Australia. Um,
Oh,
they're importers of gold, exporters of gold, and stuff like that too. I'm sorry. So when they have things that affect their market, it can affect gold. The same way how UCAD affects oil or US.
okay.
So keep that in mind. So I forget when you said that happened yesterday. You said
Yeah, about say about 4, 5 o'clock
okay. And are you in
afternoon.
the East Coast?
Yeah,
Okay, so I just want to
I'm
make
in
sure that's
New
on the
York,
same
New
time.
York time.
All right, cool. That's what I'm here in Atlanta. So okay, so around 4 o'clock yesterday. The only thing that I can speculate is like I just mentioned a moment ago, is that there was several speeches that dropped for Australia yesterday.
Oh,
Um,
okay.
and speeches typically are supposed to yield hawkish results to the markets, but that's not always the case. And so it was not the case when that news dropped yesterday. When that news dropped yesterday, it didn't cause the market to jump up the way typical news traders would have assumed. You know what I mean?
Yeah,
Instead, it sold, and so because of that, that gives you an idea too of what that means. Right now, Australia, their trade balance is way off. It's bad. So which means they're not doing that much. They've imported more so far than exported, which means they're taking more in. They're spending more money than they're actually making on selling their goods to other countries. So with that being said, that has an effect on how gold's going to trade and operate. Like I said, it's the same way how you would look at your U.S. oil against the against UCAD.
okay.
So keep that in mind that New Zealand and Australia are dollars, aka they're commodity dollars, because they're not a strong currency compared to the dollar or the euro or the pound, but they're a bigger exporter than the US, than Europe, than Great Britain. You get what I'm saying?
Yeah,
They're a calm down. So you want to pay attention to what they're doing as far as for their trade balance. If their trade balance is good and they're doing more exports and imports, and you see that good for Australia, then gold should be doing pretty good too. If it's the opposite and their trade balance just came out a few weeks ago, so that probably had a too just a late effect also too on gold dropping down because they did release their trade balance and it was about like 0.2% lower than what it was projected to be. So that also could have caused that to happen too as well. But like I said, this is one of the reasons why I want you all to start looking at the totality of what you're doing, aka know what a common dollar is, know what that country trade balance is, so it will help you to know when and when not to play in the markets or to take advantage of what's going wrong in their country. You get what I'm saying?
yeah. I understand. I heard it before.
All right, cool. Anybody got anything else, or we good to get off of here? All right. Well, we kept it actually within an hour. It is 10 o'clock on the dot. My time just changed. So I appreciate you all for getting on here tonight. It has been recorded. I'm going to stop